Hey there, Tim from Alpha Wolf Trading, wanting to thank you for stopping by to watch this interview and also make it clear to you that this is not a paid-for promotion. I collect no compensation for the interviews I do here. These companies have been identified as opportunities for investment that could provide an above average return on our investment. This is our opportunity to get to know management, to understand the vision for the company, the strategy they plan to implement, and execute to achieve that vision for the company. So if you learn anything here today and you enjoyed the interview, please do us a favor and subscribe to the Alpha Wolf Trading YouTube channel. Hey everybody, Tim from Alpha Wolf Trading coming at you with another CEO. Actually, I got a whole crew here from a very interesting story. Company that I've actually just met with, what was it, a week ago? I think it was a week ago. Very interesting concept and actually kind of an interesting story, the whole uplisting to the NASDAQ, but we'll get into that in a little bit.
And these, what you have on the screen here, these are acquisitions we made. These are not necessarily agents that we brought in. These are our own agencies that also have the able to refer and use the program. But these are own agencies having their own income besides, it's our companies, besides some of them specializing in individual health and group health insurance, and also, typical P&C, that's home and auto. But these are the acquisitions we did, what I mentioned before about doing the 10 acquisitions in the last several years.
All right, so.
And that's where we have already existing, close to $20 million of revenue.
All right, so in terms of insurance, are we talking just, what are we talking, health insurance? We talking?
Well, no, I'm sorry, but the RELI exchange is mainly focused on bread and butter insurance, which is home and auto. These agencies that we own in-house happen to, some of them specialize also in health, whether it's group health or individual health, and some of them as well, P&C, which is auto, home and auto. But the RELI exchange, with the focus of getting those agencies, that's the bread and butter of the industry, which is home and auto.
Home and auto, okay. So are there aspirations to get into health? I mean, that's huge.
It's true. We will be, as the truth is, the health insurance market and industry is evolving, everything going on with government involvement and everything else. So that's somewhat of a moving target. It is possible, but many, especially group health, is not something necessarily that you'll just sell on an online program. If you have a car, this is the model of the car. Here's my driving information, pretty clean, cookie cutter, very simple. And it needs a little more involvement usually on a health policy. And when you look at I think the insurance industry in the US is about $196 billion, and a lot of that's home and auto.
Okay.
The RELI exchange, Tim, Grant can speak for that. RELI exchange does health and does other financial services, life insurance as well. The immediate InsurTech solution was for the home and auto, which is basically a commodity. And that's where the comparative rater comes in. And as Mr. Beyman speaking with the group health, it's more of a custom solution. But we do have that talent. Yeah. It's just not in the InsurTech offering where it can be done instantly, which is part of getting the right solutions is important because there is custom pieces you want to make sure you don't miss.
Right.
With what Moshe just said here, yet the key word is yet. So it's not on the platform yet to be able to do instantly. It is on the platform. Our RELI exchange agents, right, that have their own white labeled, do have access to commercial lines, life annuity, disability, long-term care, health insurance, and all that both on the personal side and commercial side. So think of it this way. We do have the InsurTech platform and people are able to run through it incredibly fast. But traditionally, the other ways of doing business, we still have that available, and Sales Matter experts. So you come across a group health opportunity, yes, we will help our agency partners get that closed. We do all that type of business in addition. It's just that property and casualty creates the largest flow, right? Makes it as easy as possible for our agents to succeed up front while uncovering all these additional opportunities.
Okay. Well put, Grant.
And another point in that is if you have someone doing a large amount of the home and auto policies and they come across a really big group opportunity, what's the chance that they're not going to fumble that opportunity? They come across it once in a while, they bring in the RELI Exchange, and Grant's team assigns the right expert. They come in and close the deal. So, it's almost like with the mortgage, the commercial mortgage. We don't want them doing the commercial mortgage. Refer it out and make money. So here, Grant's team's going to send the right guy in, right girl in to close that group, group health, the group health policy, and make sure it gets done. So, people would rather get a part of something than a whole of none.
Okay. Grant, I don't think you ever answered me. Ezra and you, how did you guys combine? How'd this happen?
Well, when we went to market, we were looking at different companies that had InsurTech solutions that, would help accelerate our growth. Reliance Global Group had an InsurTech solution called 5-Minute Insure that was direct to consumer. It was really very closely aligned with what could be utilized with agency partners in the field. It was very closely aligned. So essentially that took the 1.5 years of development off the table that Moshe's already accomplished. And we could spend the next couple months making tweaks to the platform that would allow for our agency partner use. And then we could continue to expand on the platform from there. So I would say that there are very few companies that even had the opportunity to head the direction that we were looking for. And it just seemed perfect when we met with the team on the M&A call.
Okay. So how long have the two companies been together now?
Since April of this year.
Since April of this
April
year.
26th of 22 at close.
Okay, so this is
we don't waste time.
This is a very early stage, right? I mean,
so you think it's an early stage, but Barra and Associates has already been established.
Right.
I understand what you're saying. Believe me.
In other words, that was the beauty of taking an existing profitable business and building on that, going from 60 agents to 600 to 6,000 to 60,000. And we have, we really feel, and the response has been phenomenal. And we hired more recruiters to get them, and people are really very excited. So it's already, and I will add, besides our technology, Grant's system that he developed over 15 years or so made the business very scalable, very automated, very tech savvy, and in other words, it's already an existing strong infrastructure to support very significant scalability. It's really, it's already, we don't have to reinvent the wheel. It's already working very thoroughly.
Nothing had to be changed fundamentally.
Right.
Yeah.
Just build down.
And how are agents, independent agents, how do they find out about you?
Grant?
So the best way for them to gather more information is to go to www.reliexchange.com, www.reliexchange.com. Put in your information and you can start the conversations with the sales director.
Okay. So, and I get that. Now, my question is though, if I'm thinking about going in and I don't know anything about RELI Exchange, I don't know anything about Reliance Global Group, right? How am I as an agent or a wannabe agent going to find out about you guys? Are you guys advertising? What is your marketing that's going to attract agents to continue to come your way?
Right. So we utilize a lot of outbound reach through LinkedIn, through job boards, and through existing agency lists in order to gauge interest. What we find with platforms like this and with our history is it's one of those situations to where as you build and start onboarding agency partners, our agency partners are extremely competitive. So the offerings are just really good for the end client. Ultimately, you end up causing a lot of issues for other organizations who start to lose a lot of business to our agents. They go to the site to research and they find out the agents are with us. And when that happens, it piques their interest into learning more. So there's multiple directions that this goes. But what I find is it's like a wave, and that wave continues to grow and crest. So that's the stage we're in right now. And with all the additional people we've onboarded, it's just been very easy. It's been really easy, actually. It's been really easy to onboard these agents to this platform because it takes less work leveraging the technology, and our training can be focused on getting them understanding the systems and marketing, so we can just start putting business through the system.
What about stock options in Reliance Global?
Right. So, I mean, I guess everyone wants ownership in what they're doing.
Right.
And the way that we provide that is we provide that in multiple ways. So there's, as someone's growing their business, there's value to that business, right? So there's contractual value to that business. And that's great. In addition to that, I believe we've done the proper filings. So this is public.
Yeah.
That we are putting incentive, performance-based incentive plans. So that way there's nothing being handed out that's not explicitly earned, that they will receive stock based on hitting certain production levels. This ties them closer to our company and the overall performance of the company. So that way it allows them to be with a part of something bigger. And, you know, I mean, they have ownership, isn't it? It's a public company. For a public company, you have stock, you own a part of that company.
Yeah. And and then there's I mean, additional incentive, right? To maybe bring on other agents, right?
Definitely have a referral program as well. Those are the best ones because you come on, they want to do well because they were referred in. And then when you know other people, you're just that much more connected and everyone's working towards the same goal.
Okay.
Yeah, and I think Grant used a parable before that. It's like the wave of agents, and I would agree with that. I would just put a different spin. It's more of a snowball effect as well. As more and more of the people are losing, you're losing more and more clients to agencies that have that little RELI Exchange logo on the bottom. You call RELI Exchange and say, sign me up. Yeah. And when your client say, yeah, I use this company, and immediately when you lose a client, insurance agency loses a client, they check out the website of their competitor. And that beautiful logo is just a tease to them. And we're not doing outbound sales. We're just doing the paperwork for them to get them, or the non-paperwork to get them signed up digitally.
Now, I love, so let's talk about margins here for a minute for you guys, right? Now that you have the back end's built, so you don't have a lot of burn there, right?
All right.
How are we on cash? How are you on cash, and how is the company positioned right now?
We have whatever cash we need for operations we need. Remember, we do have the existing other agents. So the agencies themselves are cash positive, so there's no burn there. There is some corporate expenses, but most of the corporate overhead that shows us anything negative, most of it is actually either non-recurring or non-cash. So then there's not much of a burn in general. And as we grow, that in general, the corporate wide, there should be no burn whatsoever. But we're projecting not too long down the road from now, there should be not. But there was never any significant burn. We only raised funds actually for the company that went into the company a year and a half ago, and when uplisted, this is all public information, February of 2021. Another raise we did in January of this year went 99.9% of it went to an acquisition called Medigap, specialized in Medicare supplement. But we really did not raise money to cover any burn. And most of the money that was raised last year went towards acquisitions, the other acquisitions. So thank God we're not waiting for some magical FDA approval or something like that. Those are wonderful companies too, but we're already up and running, existing. And the answer to your question is very little burn, and that should disappear pretty soon.
And in terms of revenue, what type of growth are you seeing?
So right now we're at a run rate close to 20 million in revenue annually. In our Q2 of this year, we showed a 92% increase of Q2 2022 versus Q2 of 2021. That was a combination of organic and acquisitions. Actually, organic, we're doing a little better than the industry. I saw recently the number, it's about 10% than many of our agencies' organic growth. So we have some good, it's entrepreneurs who are running the businesses, the ones we acquired them from, all engaged and dedicated, and they enjoy what they're doing. And then but as the RELI exchange, actually, this is without having to spend money on an acquisition. It's a profitable enterprise.
So you went from 60 to 100.
Oh yeah.
Plan to go from 100 to 1,000. What's going to accelerate that path?
Grant, you can, we'll tell you about the monthly, etc.
The main accelerator to that path was the proprietary technology. So I went into how it was, the costs were a factor before, and that's really opened up the doors. In addition to adding the additional sales directors for the contacts, we have plenty of flow of interested parties. So really, and we're focusing on specific areas. I would say with the flow that we have today, we're still only focusing on between 3 and 4 states for onboarding agents. So that spigot, it's literally gotten to a point where it's almost like a dial. I feel like we could go up to it and just twist the dial, and we can increase the flow of interested parties based on the marketing and the efforts that we're putting out there today. So what's preventing us from growing faster? Right now we're moving very fast, and we are providing a fantastic product, and we're just making sure that product is as good as we are saying that it is as we continue to expand. So while we're a public company and we're driving as much revenue and agent flow into our organization, we're doing it the right way. So it's not like this is a house of cards. We're making sure that it's strong, and who and what we're bringing on is sticky. So we can continue to build on it instead of having a situation later to where you have to rethink people that you brought on, or you have to cut a part of the team. We don't want to have to do any of that stuff. So we're doing it the right way.
No, that's good. And you have to think about, right? When I said you guys have been doing this since April, it's young. What I meant just as young in terms of getting in now, I'm looking at the combination of the two, which has made the stronger entity, right? That is young, right? And this is where the opportunity starts to get very intriguing, right? Because now you've got all the pieces in place. And ironically, the market is doing absolute dog crap, which has not helped your stock, right?
Mhm.
But you have all these pieces that have come together. So it's like perfect alignment for you guys on the business end of it. Things have never looked better. Would you agree with that?
Yes.
Okay.
That's why I'm here.
They've never looked better. Does your stock indicate that? No, it doesn't. And that because of, well, there's probably a bunch of reasons, and we talked about a couple of them when we talked last week. But a big portion of it is just the market itself, right? We haven't had a bear market in 15 years. Not a substantial bear market. We've had some pullbacks, but they've been very short-lived. This has been a little more painful for a small cap and micro cap sector. Last 15 months have been brutal, right? So
Yeah, that's a good word.
and if you look at, you guys just uplisted to the NASDAQ. When did you uplist?
5th February 2021, about a year and a half ago.
About a year and a half ago, right? So unfortunately, you uplisted to a market that was about to get hammered, right?
Yeah.
And then back here, what happened here, Ezra, in 2022? You had a big volume spike, huge volume spike, right? What happened there?
I'm not sure. There were some announcements that were made. I never know really volume of, I'm not sure, short squeezes or other things, but I think we mentioned about some certain raises we did that may have affected the stock. Some of the investor, selling off, that's the business they're in, they do it quickly. That hurt us. But there's looking like we mentioned the other day, and I think I can say it's all public information. Again, we're not hoping for some magical approval or government approval or some invention to come about. We're an existing business. And when you look at the metrics of 54 or 57, I think about $54 million book value with a market cap of 13 million, something is telling you that the stock is a good value because that's assets we bought, spent $46 million in acquisitions, profitable businesses. And then looking at even revenue, a public company should not be trading for less than the revenue. We should hope to be trading for 5 to 10 times plus revenue. And we're at less than the $20 million revenue on market cap. So that tells me it's the deal of the century to buy our stock.
And the CEO says money where his mouth is, as you can see.
Yeah,
that's all public.
That's true. That I did. I bought in the last month or so, 2 months ago. Before the blackout period during the quarter end, bought about 500,000 shares. And besides the shares I haven't sold it.
You bought those in the open market?
Yep. Yeah.
Okay. Now I'm glad you brought that up because that is something that's important to me, right? So who knows more about the company than the guys on the inside? And usually there's only one reason why people buy, and that's because they think it's a deal, right?
I think so.
I mean, there's all kinds of reasons why people sell, but there's usually only one for why people buy. So seeing somebody that's at the top step up to the plate is to me a comforting thing to see. Does it guarantee that the stock is going to go higher? It doesn't, but I think it sends a very good message, right? Grants, options, and all that stuff. That's great, but that's not stepping up to the plate in the open market and putting your hand in your pocket and cutting a check, right? I mean, that's a different deal. So that to me means you have conviction in your story, right?
Absolutely.
Now, we can talk about how many shares are there fully diluted outstanding?
The outstanding shares 18.5 million, I believe it is. The float is probably about 9 million, and I own about 5 million.
So anything under 100 million shares to me is a low float stock, right? In the markets, especially on the major exchanges. So moving from the OTC market, great move, right? Everybody hates OTC hell, right? That's what it is. But the problem with going to the major exchange is there's a tremendous amount of pressure. So right now, I would imagine you guys, because you've been under $1 for more than 30 days, you probably have gotten a letter from the NASDAQ,
Right.
right? You got 180 days to get your stock back above $1. If you don't do it in 180 days, then you can file for an extension for another 180 days, right? And I would think, and I'm just looking at the stock from a technical standpoint, you are, what appears to me, maybe you haven't found the bottom yet. I would say it's pretty damn close, because you're kind of just moving sideways. Bulls are not in charge of the stock. Bears aren't in charge of the stock. It's just kind of drifting, right? To me, that is building a base. And at some point, you're gonna move from that base. You're either gonna launch or you're gonna drop. I think you have enough things going on, and there will probably be, I would imagine, more news releases as you grow, right?
Correct.
You're not going to put out a bunch of fluff, but you are going to, let people know that you're growing, right? And that potentially other product offerings, things that are coming along, right?
Mm-hmm.
In my mind, so this went to what, $10?
Mm-hmm.
So actually, I could just look at it this way. You've gone to $8 now twice, right?
Mm-hmm.
What do I think the odds are that you could get back to $8 again at some point? I think they're pretty good, right?
Yeah.
Would you say you're stronger today than you were 12 months ago?
Absolutely.
Okay. So if you're stronger today, now let's keep in mind, we went through a pandemic and then we hopped into a war, right?
Yeah.
And the company is executing. You're growing your business, right? 92% is what you just said. So I would think that as things start to normalize, and I know that now we have the economy and inflation and the Fed and all this other stuff going on. But, I think that too shall pass. And then we're going to get back to some form of normalization. What that is, I don't know exactly, but we are going to get there, right? You have a very clear vision of where you're going with this business. And you've just really kind of started getting rolling. Would you agree with that, Grant?
I would agree.
Okay.
Absolutely.
What is the total addressable size of the market for you guys?
Oh, it's huge. I mean, I think the numbers I saw around, I think are about, tell me if I'm wrong, there are about 1 million agents in the US. So, and we're talking about 1,000 by the end of next year. It's a drop in the bucket compared to what we could get. That's why we're really looking at the number after 1,000 is 10,000. And that's tiny, because remember, our barrier of entry is almost none. Like we mentioned before, we're not charging franchise fees or filling out. They don't have the fees. They don't have to sign their life away. Also remember, some of the captive companies require you to have X amount of people in the office, X amount of type of office space, storefront, or whatever their restrictions are. So aside from the franchise costs, which could be substantial, you also on day one, before you've made $1 of business, we're telling people, and we're adapting, actually, you mentioned the pandemic, that the outgrowth of that has been more people working at home, you could actually start with our program without the franchise fees from your basement, or from your den, and it works. And you get, like Grant says, you're a $10 million agency. Whether you're sitting in a Park Avenue office and paying $100 plus rent per square foot, or you're paying no rent in your own home without the overhead. So it is a service business. You don't have to buy merchandise. So the more that, like Grant said, we're just getting them rolling in and saying, hey, this is great. Some of them are saying, hey, why didn't I talk to you guys before I signed up for their franchise? Because they're not all that have such happy campers with them. Another thing we did not mention as much, and Moshe Fishman mentioned it about the white labeling, many of those companies are insistent using their name, especially the existing agents who have relationships with their customers. They want to use their own name. So that's why you go on to our site, you can see, you're called ABC Agency or John Smith Agency. That's it. You could keep your name, but you're proud of that. You've been working for years with, and we'll white label it for you. In the tiny bottom corner, it says RELI Exchange, but otherwise you do it. So we're really making it user friendly, user meaning the agent, as possible in many, many ways. That's why we mentioned before, I'm very confident in saying all the factors involved, all the ingredients we're putting into this RELI Exchange membership, there's nothing else, really, I feel confident in saying that in a public interview, that I feel comfortable saying there's nothing else that's really like it. Maybe similar, but not that has all these advantages in one address without a cost of zero. Very competitive product.
When Ezra just mentioned our market size of 1 million insurance agents in the US, I believe that sounds huge, right? So that's not our true market size. Like, it's not 1 million agents in the US. Most of the people that we're bringing on have never had their insurance license. So we have that million, but it's actually way bigger than that.
Yeah, we can really work on
330
million.
Yeah.
No, so I mean, the opportunity in front of you is huge, right? And I think you have a unique model that is a win-win-win. A win for the consumer because they're getting a broader range of products, right?
Correct.
So that's a win. And then you've got the win for the agent who, whether they're just starting out or, they want to take some of the pressure and the back office stuff off of their plate and just focus on selling insurance. That's a big win for them, right?
And they're competitive just about every time. Like, when they're meeting with clients, it's not a waste.
Right. So instead of getting 2 out of 10, they got maybe 8 out of 10.
Right. Or better.
That's a big difference, right?
Got it.
Okay. Go ahead.
Tim, we're sitting there having this beautiful conversation, and we're looking at your logo. I'm thinking, you're a pretty popular channel out there. And imagine if you would have someone come in with a license and you have the Alpha Wolf Trading Agency and your branding is there. People know about you, probably one of the most popular channels. That credibility of having your own name is tremendous. And not necessarily, I'm not pressuring you to open an insurance agency, but that's how easy it is that people can leverage their identity and sell insurance.
Right. On a
Great
better
example.
platform, right?
Right.
Yeah.
On a more professional looking platform, right? So it's
correct.
a win for them. It's a win. And of course, it's a win for you guys, right? Because,
Got it.
and hopefully at some point, a win for your stakeholders.
You gotta get them out of
Right? Ultimately, that's where we want to go, right? That's what I'm really caring about.
Same here. You're preaching to the choir.
All right. So listen, the way I view it is, from a risk reward scenario, could I lose 64 cents a share? I could. If you guys go BK, right? You go belly up. Is there, I don't get the sense that is on the horizon. Are you guys worried about going BK?
No, not at all. In fact, I think it's important to say I put $5 million of my own money into the business. And no one's taking any big salaries. I treat the money like it's my own. I've been in the private sector for 30 years, and I'm very conscious. Yeah, I mean, just to let you know, I think, I'm not sure, but in the private world, we built the mortgage business from my basement to number 3 residential mortgage broker in the country. And in real estate, we had many tens of thousands of units, apartments, 17 states. So we've been around the block, and I'm not, we're focusing on one way up. And God willing, we're going to get there. No question about it.
Right. So you got some challenges with getting the stock above $1. With a 9 million share float, it would not take a really significant, fundamentally, it could be significant, right? Or meaningful. And then maybe the light bulb goes on for people to how ridiculously valued the stock is right now. right?
Correct.
So you can lose 64 cents. And, I'm thinking at the minimum, just from a technical standpoint, let's see, we could go right up to here. You see this level right here? That's a very big level. It's, what is that? $1.95, $2. $2 is going to be an area where you're going to have some resistance. Okay. But 64 cents to $2, that's a pretty good risk reward ratio. Right. And that's just if I wanted to hold it to your first area of real technical resistance, which would be 2. But I'm thinking that as the story starts to come together and people understand the story better, and you will have broken this, see this trend line right here? You will have broken that trend line to the upside. A long-term trend line is a powerful trend. When you break that trend, it's also very powerful. So it could then be a long-term trend line from the lower left to the upper right. And that's the kind of trend you want to catch early, right? I think this is a great opportunity. This is a good risk reward scenario, in my view. I'm not telling anybody to buy the stock. It's not what I do. I just bring the facts, right? And to me, you have a different model, a differentiated model, a better model, right? You're not reinventing the wheel. You're just making it better. Does that make sense?
Yes, that's a good way of putting it.
Okay. So what I'm suggesting to anybody watching this is, if you don't want to buy the stock today at 66 cents, just put it on your watch list. Go to their website and sign up for their email alerts from investor relations, right? Anytime these guys put out a press release or do an SEC filing, it'll get sent directly to your email address. And you can keep tabs on what's happening with the company. I personally, and wouldn't say, I never tell anybody to go all in on anything, but this would be a really good, interesting area to take a starter position, right? And then build onto that position as you gain more confidence and see that the management team is executing and doing what they said they were going to do, right? Does that make sense?
Absolutely. You're right on target, Tim.
Okay. All right, listen, guys, this is what I want to do. I want to wrap it up because we've actually gone a little bit longer than I thought we were going to go, but that's okay, right? What I'd like to do now that we've got the whole story, Grant, Ezra, is there anything that I missed that you feel as though you want to really highlight?
I think we're okay. And I think we're okay. Also, by the way, people are concerned with recession. Insurance is somewhat recession proof. People do need insurance, recession or not recession. I guess that's also good too. It's not a luxury item. If you have a mortgage on your home, the bank requires you to have insurance. You have financing on your car, which most people do, you need insurance. So it's something actually inflation, not that we're asking for inflation, we're not asking for the gas pump to be soaking more of your money up, but in reality, inflation in a way helps us because the premiums go up, we get a larger commission, and we don't take any of the risk, remember, because we're not the insurance carrier, we're the insurance agent. So we have no risk, and if it goes up, that just increases the premium. So it's somewhat of a recession and non-recession friendly business. I guess that's a good way to put it.
So actually, you guys could do better in a recession because
that's correct.
Be looking to reduce their costs and look for shop insurance and see if they can find cheaper insurance, right?
That's correct.
And there's one other aspect also. Grant would speak of, nobody wants a recession, and Grant can speak about how that does when people are looking for new career paths and decide this time I'm going to become an entrepreneur. What you could only imagine what that does to keeps our sales directors quite busy onboarding new people.
Yeah.
I would agree with the inflation. Prices of insurance aren't coming down. And so the trajectory is over the next 5 years, there's going to be significant rate increases that benefits us. recessionary pressures, don't want the recession to happen, don't want anyone to get hurt. And you know what? If it doesn't happen, awesome. I'm excited, and we're going to grow, and we will continue to thrive just as we are. The reality is, I think it's possible something bad could happen in the economy, right? Like less jobs. And that creates tremendous opportunity for us to onboard new agency partners. So that's another benefit. But in addition to that, it causes shoppers. And with our platform, the shoppers still stay within our agency partners' business. So when they shop, we change carriers, but they stay within the business. More than half the insurance is controlled by these captive carriers. When they shop, they leave. So that significantly increases the amount of clients that our agency partners get and revenue into the organization. Reliance Global Group benefits greatly from that. And the last thing I'll leave you on, Tim, did you see a press release where we're going to buy back up to 3 million shares?
So I did, but here's the thing. I am much more impressed when insiders step up and go buy in the open market. And here's why. If you read the small print of your filing or the share buyback, what does it say? Subject to market conditions and price. No, nothing says you have to buy the 3 million shares or $3 million worth of shares, right? Yeah. That's my problem. You don't have to do it. It's nice that I see it, and I know you want to, and that's great, but it doesn't mean it's going to happen, right? When it happens, then I'll say something. But until then, it's just, to me, yes, we know that shares are cheap, and we want to buy them, and we might do that, right? And that's it, right? So that doesn't move me. Ezra stepping up and buying, $500,000 worth of shares, that moves me. Does that make sense? Absolutely.
That's also the other aspect is not using company money, using private money.
Let me ask you one more question about the software, the AI grant that you keep bringing up. Is that proprietary to you guys? Is it?
Absolutely. It's ours. I have the bills to prove it.
All right. So you have
the software is definitely proprietary. Yes.
Yeah.
Okay. Software is definitely proprietary. So I mean, I guess what I'm trying to get at is, how long would it take somebody to try and catch up to where you guys are today? If they wanted to try and do what you're doing, this kind of model, they have some challenges.
I think in order for someone to catch where we're at today and start from scratch,
yeah,
by the time that they can get to where we're at today, we're not going to be where we're at today.
That's right.
So, and Tim, I wish I could tell you that no one could achieve where we're at today. Tim, someone's going to be able to. It's not going to be within a quick time period. But again, it's not like what we have is where we're stopping. We're not stopping here. We're continuing to improve it.
Right.
And there's great people who continue to bring us the opportunities to add to the platform. And Moshe's ability to implement things at the speed he implements them with the programming team, Tim, like that should not be overlooked. That is a huge strength of our organization.
No,
I would call it the complacency risk. Like people say, the Titanic, no one's going to sink us, and then it goes down. So you have that with the technology. We're going to stop innovating, and we're so good that we don't have to worry about someone else. If you heard us say that, you should be concerned, but
we're not complacent.
We're a moving target.
Not for more than 5 minutes at a time.
No, I love it, guys. I love the story. What I want to do is, when you guys feel as though you have something significant, or let's do a quick follow-up. Okay.
Great. Absolutely.
All right, guys.
Thank you.
1 second. I'm gonna shut this off. Thanks for coming in and making the time.
Absolutely.
Guys. Hey there, all you stock market junkies. Hope you enjoyed today's interview. Today we had Reliance Global Group, ticker symbol RELI. We had Grant Barra, Senior Vice President of Operations, and the CEO, Ezra Beyman. We also had Moshe Fishman, Director of InsurTech. I hope you enjoyed today's interview, and if you did, do us a favor, give us a like. Why not give us a share? And while you're at it, how about giving us a follow? Until next time, stay safe. Alpha Wolf Trading wishes you the very best of success.